do you really think now you're sick, you're on your deathbed, you're going to take this asset that you have and they're going to make you a good deal? You thought you were going to get 100,000 and they're going to give you 125. Do you want to be in that position? You're 35. When you get to be 75, do you want to be in that position? Even with the 401k, same thing. When you're 75, 80 years old, do you want to borrow money from your 401k and then have to pay tax? You're not working anymore. Or would you rather put it somewhere where you can borrow the money and never pay tax again? You've solved that problem. And then when you die, somebody's getting it and they ain't got to pay taxes on it.
Well, Bill, thank you for joining us on the Infinite Banking Initiative. Tell us about how you discovered becoming your own banker.
Well, as David knows, not getting into a lot of detail, I came from a debt-oriented thing, getting people out of debt. And of course, we were given the book to read, which I read, like everyone, set it aside. And as you struggle to try to make money and you try to help people, as you learn more, you realize that eventually they're out of debt and what's next. So I read the book several times. And when I first got interviewed to become a practitioner, I had read the book 6 times at that time. I read all the other books. And I remember Carlos was like shocked. You read all those things? But I had nobody to teach me like everyone else. So you struggle to learn. And the more you read it, and I don't really sit and read the whole book anymore. I'll do like I hear everyone else do. I'll go to certain we'll go on a trip and I'll bring the book on a plane and I'll just read like a couple pages or wherever I want to be at the time. And there's so many things in here that you can't retain them all. And you have to go back and refresh your memory. It's ironic.
Well, what does the cover look like in the book?
What does the cover look like this?
Oh, okay. That book. Okay.
That book, because everyone gets hung up on the illustrations. And I always thought, to me, the illustrations, the numbers on the illustrations, it's a waste of time. And when people start talking about it, I know they don't know infinite banking. Because the only thing that's important to me about the illustration is that you designed it in a way that the person, the client, the prospect wants to be able to use it. Whether they do use it that way is another thing. But, if they have money and they want to put it in because, they're going to buy something or they're going to do something, as long as you have it set up so they can do it that way, to me, that's the most important thing. And when people talk about the illustrations, I always go to the book. And, I'm in an IBC mastermind group. And actually, we just had one this week. I didn't say anything. And Bruce, who runs it, said, "Bill, you've been real quiet." He goes, "We must have put you to sleep earlier." He said, "We must be putting you to sleep with the illustrations." Because I get bored with when they talk about that. And I go, well, yeah, because to me, the most important part is the human problems. Coming from where I came from, as David took the time to tell me many times till I finally got it in my head, a lot of times when you get people out of debt, as I found over the years, the debt is not the problem. The problem is the person. So the first thing you need to do is find the person that's in debt because of a situation, not because they have no discipline. Because there are people out there that are in that situation. And once you can solve their problem, because honestly, they don't care about this book. They don't know who Nelson Nash is. They don't care about anything. They care about one thing: my problem. And if you can solve whatever that problem is, they're hooked.
Yeah. You started off the conversation with it was an IBC type company, and their main market focus was using these permanent whole life policies to get people out of debt. Okay, and so just to clarify what that means to me is that you're shifting their third-party debt into a policy loan structure. So now that debt is now been transferred to an insurance contracts, okay, in the form of policy loans. Okay, so the client is still in debt, but they're servicing the debt through a vehicle that they own. Okay, and so, becoming your own banker talks about, your need for finance is greater than your need for death benefit. Okay, that's the premise of the book. So some people focus on your need for finance, your need to use this structure to finance things in your life, including your debt. And that could be car debt or credit card debt, probably more than anything else. And circling back to the human problem, if somebody has got a problem with a credit card and they shift that debt, they liquidate that debt to a policy structure, then it's not going to take too long before now they have a debt they have to service within the insurance construct, but they also have their credit cards run back up to a certain level. But now they have twice the debt to service. So if they don't understand the human problem, right, then you're not helping them. You're probably digging a bigger hole for them, right?
Well, the first thing that goes, if they don't understand what they got, what they purchased, is the life insurance policy, because it's another debt and they don't see any benefit to it. So the metamorphosis for me was learning infinite banking wasn't just that. And I used to explain to people, getting people out of debt is like taking a bite out of the apple. But IBC is the whole apple, because you can do anything you want with it. And you just said now, like, I'd love to, because Kate, what she does, she finances, and she said it last night at the real estate. She bought a banana at Walmart for 17 cents, but it was financed through the IBC policy. Why? Because when I first met her, she paid cash or used her debit card for everything, because she had a problem in the past. Her husband couldn't work. He was sick and money was tight. So she had a financial situation. So in order to avoid that, that's what she did. The problem with doing that, you don't have any money. In her situation, what happened was, at one point, she had 2 houses, sold one, had another one. COVID hit. She lost her job. The first house that was getting sold, the guy backed out. Now she had 2 houses, no job. How are you going to deal with this? It all worked out. In the end, she sold the house, and she was going to do what everyone does. Sell this property, take the cash from this property, pay off her mortgage. She went with me to a real estate investor group that I'm in, way back in the beginning. And I went to the bathroom, and these guys were talking, and gals, they were talking about how they use their policy. When we were driving home, she says to me in the car, I'm not going to do what I was going to do. I'm going to do what you do. And I hadn't really told her, because if you don't want people to talk to you, you tell them you sell life insurance. So you go to a party, I'm a life insurance salesman, no one will bother you. So I said, what? And she said, well, I want to do what you do. I want to put it in a policy and then pay my mortgage off. I said, we talked about what happened. So it took me 2 months. She finally said, hey, are you going to do this or what? But what happened is, for her, she had the money. And she said to me, she goes, look, if I do it your way, I'll pay off my if I do it the way I was going to do it, I'm going to pay off my mortgage. I'll have no mortgage, but I'll have no money. If I do it your way, I'll have no mortgage, but I'll still have my money. It'll still be working for her. She ended up never doing that at that time. And what she did was she put the money in. She maxed it out the first 2 years, never realized, how am I going to make these other 5-year payments, to keep it going. Meanwhile, the 3rd year, she maxed down again. Like, where did I get all this money? At the last think tank, I forget who was talking in the front. We were standing in the back, and she said to me, Bill, how did I get here? How did I get where I'm at? Her life has so changed because she finances everything. And I talked to Mark Benson about it, because he has his green and red thing. And I said to him, and I told him what he was doing. He goes, man, You got it. It's page 48 on the book. You know, it's expanding your system. He got real excited. We got talking about it. So then I watched it again after we spoke. And once somebody does that, because now we have a couple other people. Mark says he's got like 55. Once they do that, infinite banking, they get it because they're doing it right now. When people earn money, they take their money, they put it in a commercial bank. They take the money out by paying debts, paying expenses. They buy things and they make investments. But the problem with doing it that way is their money is gone forever. They're never going to earn on that money ever, ever again. So we tell them, look, you know how, and when we talk to them, we always tell them, you know how to do that. I'm not going to tell you to do anything different, but it's not working for you the way you want it to. And they go, yeah, right. It's not. Otherwise they wouldn't be talking to me. I just want you to do one thing first. And we know it's got to go through a bank first, but we want you to take that money that you're earning, put it in a policy, borrow out what you need to live on and live your life. But next month, you're going to have to do the same thing. So take the money that you're earning and pay the loan back. Because what we tell people, which is important, and I learned this the hard way, because people love to take loans and not pay them back. So one of the things I tell them when we talk, because they don't get IBC lingo. And I know when we're online, we have to speak differently than we did. It's not a bank and, you know, you're a banker and all that. But when I talk to them, I have to get down in the trench with them and I have to explain things that they understand. And when I tell them right up front, I want you to put the money here and then do what you're doing. I don't have to explain anything. They know how to do it.
You know, I know the language you're using is for your client because they get it. They get you and get where you're coming from. But when you say, you know, take money out of a policy, if you call the insurance company, I'm sorry, take money out of the policy, what's the insurance company going to do?
They're going to take it out of the cash value and not take a loan.
Yeah. So again, you got to understand there's only two ways you can put money in a policy. Number one is premium. And number two is loan repayments in the form of either principal or interest. And the reason these things have uninterrupted compounding is because they're contracts. There's no money in it in the first place. It's just a ledger is all it is, right? The money's coming from the coffers of the insurance company. So that's great. And I think that, you know, you're talking about paying 17 cents for a banana through a policy loan. Yeah, what you said was, you know, she borrows, like, for example, $5,000 on the first of the month, runs through all her expenses, and then at the end of the month, when she gets paid, she dumps $5,000 in form of policy loan repayment. And so the interest is probably rebated to her because, right? So the interest charge is like forgiven. Okay. And in that situation, because the policy's paid off in a month, the policy loan's paid off in a month. So that works phenomenal in that case. It's just a matter of tracking that interest and tracking that loan and knowing when that policy is going to renew. So I hope I'm not confusing anybody.
And like I said before, when we talk to them, we talk their language. Like when we talk about borrowing and paying back, we say, look, have you ever had a mortgage? Have you ever had a house and had a mortgage? They go, yeah. I said, well, you know, very quickly, within the first year, you get a letter and it says, you know, David, don't send your money to Bank A anymore. Send it to Bank Z. I say, what happened? Did your debt go away? And they go, oh, no, the other bank bought it. I said, right. And what's going to happen now when you pay off that 32% Capital One card, you're paying 32% interest. The only thing that happens is Capital One goes away. The debt, now you own it. So you should be willing to pay the same 32% to eliminate that debt. Then they get it. You know, if you get you got to try to explain it to them, at least we do, exactly what they're doing. And you got to ask questions, Nelson said. And the more I read it, I go, man, I'm doing it. He had to go through the same thing. I had a guy, an IBC guy call me the other day about something. And he was asking me, I said, you have to ask the questions, because he was doing the policy on one of the things on himself. And he goes, well, which one should I do? I said, I know which one's better, but I don't know which one you should do. You know, at your age, you have to look. And I asked him questions. And when I asked him the questions, the way Nelson did, he knew the answer. I don't know. I tell people in the beginning, people would say, I know IBC because they read the book. And I stop that right now. I go, look, when I start with them, I go, look, I know IBC inside and out. You don't. But you know your lifestyle inside and out, and I don't. And we have to put it together like this. And when we do, you're going to benefit. And they know that, because some people will take a loan and they know they're not going to pay it off for 6 months because they're in real estate. When that deal closes, they're going to pay it back. But the people we've got, like in Kate's situation and her daughters and everything, they're using it just like they would at a bank. I know you nearly freaked out when she said she made a $20 loan repayment. But she's a stickler. Most people cannot do, because she yells at me. She just does it that way. But not everyone is that disciplined. The only thing I know, and she knows, if you just take the leap, it will change your life. And I can tell you myself, you know, as I heard somebody tell me this when I was young, I didn't know what he meant because I was about 15. He goes, Bill, I was sitting on a bus, and he's, Bill, he was an older guy. I went from rags to riches to rags, and now I'm back to riches. But when you're young, you don't realize that that's going to happen to you. Then it happened to me. And now I'm on the other side. And just to have the money and have no stress, no matter what happens, why didn't I do this 30 years ago? You know, I went out of business, had to shut a business down years ago. And if I knew what infinite banking was at that time, I would have never had to do it. Because you're in control. The problem with this concept, it's so easy. It makes it difficult because people can't believe how easy it is. And everyone's already a banker. They're just banking in somebody else's bank. If they would just become their own banker, use the life insurance company's product, you know, do their banking through there, borrow and pay back, they're going to end up, which is they end up buying 2 and 3 and 4 policies because all of a sudden they have money they never had before. And people, one thing I've learned, people have more money than they realize. And it's point number 6 that you said in one of the last videos, when Nelson, right at the end, he said, point 6 is rethink your thinking. They'll have it in a 401k. They'll have it in this checking account. They have it everywhere. When if they just had it in a life insurance policy that they were using,
There you go.
it would change their life. Once you take a loan from your policy, you know you owe it back to yourself. And all of a sudden, I get money and I just send it there. Because if I need it, I know I can get at it. It's not doing me any good sitting in, you know, a bank somewhere. You know, you gotta have, what do you call it? Ready money or easy money or quick money. Yeah, you gotta have that. But
Yeah. Well, another way of thinking about it too is, you know, if you look at a ledger sheet for a bank, they have, you know, credit and debit, right? Asset, debit. And what's their asset and what's their debit, you know? So their assets, their loan portfolio, their debit is their money on account, their savings accounts that they're sitting there. So the same thing with a policy loan. You know, if you take out a policy loan from an insurance company, you own the policy, you're a mutual member of the company. So now that policy loan is now an asset if you service it responsibly. So
everything in here is so simple. if you just take the time to walk people through it, because we have been so conditioned by bankers to do things the way they want us to, that it's hard for people to realize they can do it themselves. One time I was at church, I was talking to a financial guy, and he said, Bill, you know what? If there were 100 people online standing here to talk to people, he goes, 97 of them would be online to talk to me, and only 3 would be coming to talk to you. He said, but yours is so much better than mine. And it, the thing I like though now with what you've done, the word's getting out. Just me being able to call up Mark Benson or James Nethery or, anybody and get an answer, or them being able to call me. Because in the beginning, when I did my interview and you spoke and then Carlos went on for like 20 minutes, asked a bunch of questions. I wrote everything down. So then I went on for 25 minutes. Bob, when he got there, he had nothing to ask. He asked me one question about where how that other company worked. And, that was it. But the biggest mistake I made was at the time you guys said, you don't need a mentor. And I wish I had, looking back, because I did have one, but it was James Nethery when I was working out. I'd listen to his tapes. And so I do a lot, and I always tell him when I see him, and he always kids me, but it would have sped things up because I had nobody to ask. I just had these debt guys. Not that they would, they were doing something different. It's the same thing, but it's not, because they don't look at the big picture.
It's not the lifestyle. Yeah.
Yeah, exactly. If you can use this, you can finance your lifestyle. You just have to realize it's going to be your banking system. And if you can stay with that, if you borrow $5,000, you're going to need the same $5,000 next month, and you're obviously making $5,000, so just put it back where you took it from. We put it in somebody else's bank, and then we write checks out, and it's gone. But if you put it back, you just keep doing the same thing. And what's the cost of the interest on $5,000? In a month? Nothing. Nothing. But, when I read the book, the other thing is, before COVID, I used to get out and talk a lot. And I do very simple PowerPoint presentations. I don't do these fancy ones because I don't want to intimidate people. And I had some great ones. And I reread the book again. And one of the ones about the plane, I go, where did I get this from? I stole it from Nelson because he wrote it in the book. I just put it on a PowerPoint. And the more I go through the book, it's like, it's everything he said. He's had the same problem that we've all had. Think about it. He started to get this in the 80s, and he was trying to figure it out for himself, I'm sure. So in the 90s, he's like trudging there, nobody, no foot soldiers. And then you come along, David, and you told me the story. You went and a couple times, nobody showed up.
Mm-hmm.
And you weren't as big,
yeah.
Yeah. So he has to look down and say, I got a small army now, and everyone does it a little differently. Some guys are all over the internet, and they do 1 million cases a month. I met somebody today that works with somebody, and he does that. He goes, how do you? I don't like to do it that way. I'm old. I'm not young like these people. But we do them, and when they understand it, and we walk them through it at their pace, it changes their life.
Well, the problem with doing a million cases a month, quote unquote, okay, is, does that prospect really know what they're getting into? Are you just taking advantage of their excitement? And what, the hook from the video or whatever marketing thing you threw out there, and you close the case. And so what happens when it's renewal time for a policy? You might have to go through the same drill again over and over and over again. It's better to have qualified prospects who have caught the fire because they understand the intrinsic value of being your own banker, not the shiny nickel, like you said, or whatever, but this, Nelson said, this is a long-term solution to a long-term problem, and it takes effort every day to stay the course. And you talk about Kathleen over and over again, man. It's like, I mean, I couldn't do what she does.
A lot of people can't. Having the IBC badge, to me, it's bragging rights, and I do to everyone else, being a New Yorker, that I would hate if they did it to me. I remember I was at an event. We go around the table and everyone tells who they are. And I go, well, Bill Curtis, I'm an IBC practitioner. At the time I said, there's about 200 of us in the country, and this is what we do. Well, I was talking to somebody at the end, and this insurance guy comes up. He was there. And he goes, that's not true. Interrupted. That's not true what you said. I go, what? He goes, that's not true what you said. He goes, there's thousands of us. I said, oh, if I go to the IBC website, am I going to see you there? Oh, no, I'm not IB, but I do IBC. So of course, me being a wise guy, I said, oh, so you're like those doctors on TV. They're not real doctors. They just play one. So you're like you're not really one. You just play one. But somebody gave me a better answer. And they said, oh, you should have said, give me your card, and took his card and read his name and said, Daniel, telling people that you can do something, that's really not legit. You could lose your license and then put the card in your pocket, which is better than what I did. But you know what? All those people, the TikTokers and the YouTubers, they've really helped get it out there. Unfortunately, some people, they don't get the proper training. And even last night when I was at the event, this person that has an IBC, he's with somebody else. And he said, there's certain things he doesn't know. So he said, I should call you guys and talk to you. I said, well, he was asking us questions. But having said that, I'm sure I have clients like that too. The problem I have, the best clients we have, they call you before they jump off the cliff. Most of them, they jump off the cliff and they call and they go, hey, Bill, did I need to put a parachute on? Well, why didn't you call me 2 weeks ago? They already did something, and now you got to figure out, okay, how are we gonna fix this? But the ones that call and get it, I have one client, one of the first ones I ever did, she had all kinds of debt. Probably says something about me. She really fully doesn't understand it. And I accidentally sent you the video. One day I was sending it to somebody else. And she said on the video, well, it's funny because she said she asked me during the testimonial, she said, and she did ask me, she goes, is this legit? Is this legal? The nice thing is in 7 years, in her case, she holds up the thing. She had 22 debts of different kinds. But the last year and a half, she had paid off all of them, except she had an equity line. She had a automobile loan because her automobile went down, and she had a mortgage. So in about 14 months, she paid off the equity line. 6 months later, she paid off the auto loan. And in March of 23, because I still have it on my phone, she calls me. She sends me a text. I just took the loan. I'm paying off my mortgage. And when she said, when I pay off the mortgage, I'm retiring. So I said, I sent back to her on my phone, well, how does it feel? And she sent back a big emoji smiley face, And to this day, she really doesn't get it. Her husband did. but it worked. You know, she said, as I started, and she said at one point, she goes, and sometimes I was still paying $2,000 a month. And I was like, oh, I'm still paying $2,000 a month. But I realized it was going back into my pocket. It wasn't going into somebody else's. And that's all she really understood. But she's going to do another one. Her son has a policy, and the commission is long gone. You know, I've earned it. But that feeling, and whenever I talk to her, never goes away. Never goes away. Because they'll say to us, you did it. I go, I didn't do anything. I tell everyone that I can coach you, I can tell you, I can do everything, but you need to do your own push-ups. You know, I relate everything to sports or a gym. You want to get in shape? Great. But you got to show up and do the push-ups. I can't drag you in here. You know, the funniest commercials I hear, I hear online is like, you know, so-and-so, we had these policies and we realized we didn't need it anymore. Didn't need it anymore. You're not going to die?
Yeah, we can sell it. Who knew?
Who knew? Right? Who knew? And the other thing is, I always like when I do the videos, I'll say, like, do you really think now you're sick, you're on your deathbed, you're going to take this asset that you have and they're going to make you a good deal? You thought you were going to get 100,000 and they're going to give you 125. You really, do you want to be in that position? You're 35. When you get to be 75, do you want to be in that position? You know, and even with the 401k, same thing. When you're 75, 80 years old, do you want to borrow money from your 401k and then have to pay tax? You're not working anymore. Or would you rather put it somewhere where you can borrow the money and never pay tax again? You know, you've solved that problem. And then when you die, somebody's getting it and they ain't got to pay taxes on it. And I wish we could just, I guess we're getting there. You wish it was quicker. I know for you, you must see a big benefit, because I heard you say the other day on one of them, the last one I listened to, we're up to like 355 now.
Practitioners.
Yeah. So, you know, I guess it has a lot to do with Lee, because you've been here forever and she's only been here a short time. And the Canadians, the Canadians.
I need help. The brothers too. Help with more things than do just this. So
The thing about, you know, things like the podcast and people, you know, who are involved, who are authorized IBC practitioners who have their own podcasts or social media presence, you know, they're helping kind of drown out the noise and the misinformation out there about the infinite banking concept. And so that's why it's so important that you are working with someone who is an authorized IBC practitioner. You are getting accurate information and someone who has learned from the source.
well, yeah. Let me just expand on that a little bit. You know, there's some of the noise. There's different types of noise out there related to advice, financial and marketing, as related to infinite banking and the infinite banking concept. Is you can really hurt somebody if you put them into a product that they don't know what they're doing. They don't know how to use it properly. They don't know how it functions, and that can be related to even a properly structured dividend paying whole life policy. But if you have the passion that Bill's got, and you're a TikToker or whatever, and then you put these people into an index universal life policy or a VUL or something like that, and they don't even know what they're doing to start off with, and then they get stuck with something like that, and now you're really asking for trouble. And that's the noise that I'm afraid of. Now, obviously, we want to promote the infinite banking concept responsibly. We want to promote our authorized IBC practitioners, but somebody who has no intention of doing IBC with our community because they want to sell something like that, those are the ones that really bother me. You know.
Well, Kate was flying this week. She hardly ever flies, and she told the people with her, she's, the reason I don't fly anymore is because of the policy. Because they saw her, she always takes my book because it's all highlighted. So it makes it easier. She's reading the book and the guy goes, oh, you know that. I've got one of those. So these people sold him the policy. Of course, I looked them up. One person just got their license last week, but they're not IBC. And he says, I have it, but I don't know how to use it. And she goes, well, look, you can call us. We'll help you, because you don't want to get the negative out there that, this doesn't work. The IBC is a scam. No, they're scammers that are trying to do IBC, and they really don't know. The work in this really, I know it's hard in the beginning when you're learning. Where do you start? How do you build the policies? How do you structure it? How do you get them through underwriting? How do you do all that? But the real work and the best part of it is after that. Because if you hire somebody and you give them a phone and a desk and you hire them as a banker and you never speak to them, they will fail. But if you nurture them and teach them and train them, not only the problem life insurance guys have, they sell one policy, they got a commission, they're on to the next one. And I tell everyone, you work with that person, what's going to happen, they're going to buy another one faster than you can think about it. Then they're going to buy another one. Then they're going to tell their friends and family. And you don't have to be running around trying to talk to a lot of, because they come with you and they come now with the trust factor. You know, we're at church a lot, so a lot of people know us. So that trust factor's there. It's just a different way of thinking. You know, I think one of them said, or you might have been saying, somebody went to a life insurance company and they were talking about, well, these guys are high producers. Well, I get that. You know, they're looking at it from a different perspective, but we're looking at it from, look how many people we saved, is really what it comes down to.
Yeah. And a lot of people, a lot of practitioners that we have had no intention of being life insurance agents, but they were an IBC client who got it, and they matured into an agent, so with no intention of selling life insurance, but they believed in it so much they wanted to promote it, and they wanted to help people, and they wanted to use their story as to establish that trust factor, you know. So
it's all there. It's all here, right here in the front. All you got to do is read it. And the grocery store, I had a business. I used to buy things I used to take things out of the business. Not only did I buy them, I didn't even pay for them. How stupid. You know, shouldn't I have paid more?
Stealing the peas, right?
Stole the peas. Yeah, somebody told her that last night. He was talking and something came up and he looked at her and he got another, he goes, oh yeah, I'm not going to steal the peas, you know, but you know, you need to hold their hand. And at least now we got a lot of good people doing it. You guys have done a great job.
Well, Bill, thank you so much for being with us today. And as we conclude our time together, why don't you share with us what the infinite banking concept means to you?
It allows me in the later stages of my life to help people live a stress-free life and be in control, rather than the way I lived most of my life. You know, you make money, you spend money, and you're chasing money, and it doesn't have to be that way. It can be a lot different. It's just take the time, read the book, go to the infinitebanking.org website, find a guy in your area or find somebody across the country that you can work with and let them help you. And I guarantee you one thing, it will change your life forever. That's a fact.